Hi, welcome to my channel. My name is Pradeep, and in today's presentation I'm going to explain you the concept of document splitting. So as you know, the document splitting is one of the most important feature of NewGL. So why we need a document splitting? Okay, so what is the requirement of document splitting that we are going to discuss today? We will take one scenario and we will post that transaction, and we will see what are the different type of document splitting, and we will try to apply that type in that particular scenario so that we can understand the concept in a better way. So first we will understand what is the document splitting concept and why we need this. As I told, the NewGL offers one important feature as document splitting, and with the document splitting we can split the line items or as per our required or specific characteristics like profit center, segment, all this. So that means in simple languages, if I will say why we need document splitting. So using the document splitting we can prepare more correct financial statement. That means we can prepare the profit and loss or the balance sheet, the financial statement, the balance sheet, we can prepare it correctly. So according to the required characteristics, which is, let's say, segment, profit center, like this. So that's why we need a document splitting. For example, if I will give you the scenario. So this is one scenario I prepared and I'm going to post the transaction here. Suppose I'm going to post one customer invoice. So in this case, I'm going to debit the customer 20,000, and assume that we have two plants, and in two different plants we are maintaining two different plant is my, let's say, my profit center. So P01 and P02 is these are my profit centers, and profit center wise we are maintaining the revenue accounts. So these are my revenue accounts with cost element category 11, that is the revenue. So assume that I'm going to, or this particular customer is purchasing the goods, or we are selling to the customer with from two different, that means profit center wise we are recording the transaction. So customer I'm going to debit 20,000, sales revenue credit 12,000, that is P01 is my profit center. Again, when I will post the transaction, I will not manually enter the profit center here P01. I created one derivative rule. Here I will enter, while posting the transaction, user will enter the business area and automatically system will pick the P01. So I did the OKB9 setting and I have created a derivative rule that 3Ks, you remember all those. So that I did all this configuration. So revenue will be one P01, my revenue account will be credited 12,000 with profit center P01, and profit center 2 or the revenue account. So here I will use two different revenue accounts through different sales account with credit 8,000 P02. While posting this transaction, I don't have any issue. Okay, while posting this revenue account and this account, I don't have any issue because this will be entered by the user in the entry view. And through the auto calculation process, system is going to calculate the tax, and this is the tax amount I have calculated manually, but we will see in the document also. So for this I did the tax on sale purchase and tax procedure, all these tax codes, everything is configured and it is linked with my company code. So output tax will be 8% on this 20,000, and this is one inclusive tax configuration I did. That means 20,000 will be invoice which includes the tax component. So revenue is going to credit 12,000, 8,000, and tax will be, this is 1481 will come. So some percentage, some points are there, just ignore. Now the problem is we don't have a profit center for this 1481 or for the tax amount. So for this tax line item, you won't get any profit center because this will not be a manual entry. This will be automatically calculated by the system. Similarly, the customer, for that also, because we are going to enter the profit center for the P&L line entries or the P&L line item, which is my revenue here. But for the balance sheet item customer, we don't have the profit center. Now what will be the problem in this case? So now you can see the debit and credit are not balanced. So that's why I told you. So when in this situation or in this type of scenario, we need the introduction, or we need the tool or the document splitting configuration. So by using this document splitting, we can prepare the financial statement or the balance sheet correctly. Otherwise your balance sheet will not balance here because your debit and credit are not balanced. For example, if I will take the profit center 1, what is the credit amount? 12,000. What is the debit amount? We don't have. For profit center 2, credit is 8,000. What is the what is the debit? We don't have. So that's why in this scenario, the the document splitting concept are applicable. Before moving to the hands-on, let's do the let's understand what are the type of document splittings are there. There are 3 type of document splittings are there. One is active splitting. Also it is known as rule-based splitting. That means here system is going to split the line items as per our configuration or as per the accounting documents. With the meaning of predefined rules means with some predefined configurations, the system is going to split the line items. As I told, I created this derivative rule and all. So that is the meaning of predefined rule. So with this predefined rule, system is going to split the line items. That means if I will apply the active splitting here, so maybe after the splitting, my output tax is going to be equally going to be split in 2 line items, credit with profit center 1 and profit center 2, and customer is also going to be split into 2 line items, debit. But as we know, in entry view we are not going to get the profit splitting items. Always it will be there in the GL view, not in the entry view. So I need to go to the GL view to check whether these customers are split into 2 line items or not. That is your accounts receivable. We will see it. Then passive splitting. Passive splitting, it is known as also like it is applicable on clearing documents. Clearing documents may be incoming payments or outgoing payments. So that's why I have specified here on payment transactions. And in passive splitting, system uses the same rule which you have already applied in the active splitting. So that means whatever the configuration or whatever the rule you applied in the active splitting, same rule will be applied on the passive splitting. That's why. And we can't change it. On the basis of active splitting rule, system is going to split these line items, right? Now, another important one, zero balance splitting. So here we need to ensure that the document is always a zero balance. This one practically once you will see, you will get the idea what is the zero balance, and it is a very important concept in the document splitting, like comparatively your active splitting and passive splitting. Okay, so let's post the transaction and we will understand that. So I'm going to log into the system. So this one I'm going to configure in the ECC system, but this can be also applied on the S4HANA also. But this one I'm going to show you, this transaction I'm going to show you in ECC system. So I log into the remote desktop and I'm logging to the GUI. This is my ECC system. All the required configurations I did it for all this, right, for active splitting, passive splitting and zero balance. All this configuration, my receivable configuration, GL configuration, new GL configuration, all these configurations are there. Now I am going to post one transaction. So I'm going to post a transaction through FB70, that is my FI customer invoice, and here we will apply all these settings. So select the customer, invoice date. So let's say I will take here. So I'm just following this particular scenario what I have created in example. So customer, I'm going to debit 20,000. 20,000 customer I'm going to debit, and here I'm going to select the tax code, which is my output tax T2, and I need to select here 2 revenue accounts. So revenue account sales, one I will take this one 2003, this let's say 12,000. This is right now entry view. As an user I'm going to post the transaction, and this is my sales. but I need to enter the profit center, but directly I will not enter the profit center. Here I will select one business area. So let's say I will select here business area as unit 1, and this one is another revenue account 2004, and this will be balancing figure 8000, and this is also sales, and I will take here the business area as unit 2. Fine. So this is the accounting entry I have entered here, and I will show you the passive one also. So I will enter one. I have entered here business area, but system will pick the profit center. Accordingly, I did the configuration. Now I'm going to the payment tab, and here I will enter one payment term so that I can show you the passive also in clearing document. So let me take some payment terms here. That means the cash discount while doing the collection. So let me take something randomly. Let me take this one, TZ1. Okay, so within 10 days, if the payment will be there, then 3% discount will be applicable. And today we are going to do the collection, so 3% discount will be applicable. The discount configuration also, it is there. So post it. Document posted 18004. This is the first document posted, and in this document, first we will see the document in the entry view, and what is the problem there we will see. Then we will move to the GL view, and there we will see what is the document splitting concept applicable there and how it is applicable. Let's go to the document. So this is the document 18004. Right now I am in the entry view, and in entry view you can see customer is debited with 20,000, which is balanced item. Revenue credited with some amounts. Why now in our example it was there as 12,000, so 12,000 inclusive tax, right? So the tax is calculated here. You can see 1418.48 is calculated, and accordingly this is sales amount is also reduced, because as I told, this 20,000 is your invoice price, which is inclusive of tax. Now you can see for the revenue 1 and 2, 2003 and 2004, we entered the business area. Accordingly my profit center and segment updated. So this is profit center 1 and profit center 2. Accordingly segment updated because I did the configuration. Now the problem is I don't have a profit center entry here or segment entry here for the output tax. Now you can see it is the full amount is updated here, and I don't have a profit center information is not there. Similarly for the customer invoice, you can see profit center information is there. Now we need the document splitting should be applied here. Otherwise with this extract, if I will prepare the balance sheet, so of course my balance sheet will not tally or it will not balance. So we need to go to the general ledger view, this one GL view. Okay, let me sort the data for you. In this particular document, I have applied both active splitting as well as zero balance clearing splitting. So you can see some entries are there in the zero balance clearing entry. Why? Because this tax is automatically calculated. We have not entered anything. It is as per my configuration, it is automatically calculated and it is balanced, right? So check the accounting entry. Accounts receivable, right now we are in GL view, so our reconciliation account is updated with accounts receivable with updated with 12,000. What is the profit center? P01. Revenue credited with this amount which we entered at the time of posting, so that is also updated with P01. I just sorted the data, and you can see here this is the tax amount. It's a credit entry, right? Tax supposed to be credit entry, but here it is entered as zero balance clearing account, because you can see the tax credit entry is available here. This is my credit entry with this tax code T2 what we entered. And for this profit center 2 also, accounts receivable debited, revenue credited, zero balance accounting entry, this one is there. But if you want like whether tax is updated, you can see tax is updated here. But if you want to see whether tax is the credit amount is, because what is the accounting entry? Output tax should be credit. Let's go to the GL entry, and there we will verify whether tax is updated or not. So I'm going to FBL3N, which is my line item. So tax account is 1011. Okay, 1011, and let's verify whether this amount is updated or not. So you can see this amount is updated. So credit entry is updated here in the tax account. Only just to make the document or the line item balanced, this zero balance concept is applicable here. If we will not apply the zero balance account here, so the tax amount will not split here. So in this particular document, we have applied both active splitting as well as not the passive, active splitting and the zero balance document. Okay, so I hope you got the idea why we need a document splitting. If we'll go to the entry view, let's go to the entry view once again. This is the entry. So right now I'm in the entry view. In entry view, you can see customer is not updated with any profit center. Tax is also not updated with any profit center. I have only the profit center credit balance for P01 and P02. That is my sales account. But when I'm going to the GL view, each line items are splitted. So you can sort the data with profit center or with segment also. Okay, so this one is, now we are getting a splitting of entry. Now let's, one is pending, that is the passive splitting. Now I am going for the collection for this document. There we will verify whether the discount is going to split into two line items or not. And also we will see the your accounts receivable, which was debited earlier in two line items. Now it should be split. Okay, let me post a collection entry. So here you can see all your line items are equally debited and equally credited. This is F-28 entry, incoming payment. Here I will take the debit amount. I don't have the bank configuration here, so I will take the cash account. I don't know what is the receivable amount. Let's continue with 1. Here we will select the open item, that is customer. I do have open item for two other items for this customer. Just ignore, deactivate. Let's deactivate this. We are considering this 20,000. So 3% discount within 10 days. 3% discount is there, whatever the payment terms I have selected there. So now the receivable amount after discount is 19,400. Let me change the amount, 19,400. Okay, so you can see your discount amount also automatically splitted in both the documents. You can also check in the GL view here itself. Now I'm in the simulation mode, and here I will show you the GL view also. I'm using remote desktop, so that's why maybe it is taking some time. Right, this is the document. So now you can see your cash account. This is GL view, right? So cash account also split in two line items, profit center 1 and profit center 2. Discount is also split into two line items, debit item both are. So that is also profit center 1 and profit center 2. And also receivable amount 12,000, 8,000 also invoice amount, that is also splitted. So everything is correct. Now you can post the document. document posted. This is my collection document. Let's see it. This is the entry view. For collection, balance sheet item, no profit center update. For customer, balance sheet item, no profit center. For collection, also no profit center. Only for P&L items, the profit centers are updated. Now if we go to the GL view, let's sort the data here also. This is the passive splitting. Whatever the rule we applied in the active splitting, that is in the revenue account, same rule is applicable here. Okay, now you can see profit center wise I sorted the data. Now your profit center P01 0 balance and profit center 2 also 0 balance, because your you have equal debit and equal credit. That is the concept of document splitting. So I hope you got some idea about the document splitting and you enjoyed the video. Thank you.